Hi everyone, a very good evening to all of you. Before I begin, please let me know if my audio and video is clear so that we can have the class in a smooth and continuous manner without any disruption. Uh, so our topic for today is the Global Financial Stability Report, which is very important from your exam point of view. ठीक है, ये बहुत ज़्यादा इम्पोर्टेंट है, especially those who are preparing for phase 2. ये एक this is one of the most important reports that you need to cover. तो ये जो global financial stability report है, this is released by IMF. ठीक है, और ये आपको अच्छे से पढ़ के जाना है for your exam. ठीक है, this is also important for those who are preparing for next year. So you will get to know a lot of details regarding the global financial scenario, the global financial markets. Good evening, Satyarth. Please let me know if audio and video is clear. Uh, if you want to download this YouTube class PDF, you can do it from the Oliveboard app. Just go to the courses section. There's going to be a separate YouTube class PDFs folder. You can download it from here. Fine. And those who want to connect with me beyond these sessions, I'm sharing my Telegram handle over here. Mannat Educator is my Telegram handle. Okay? Mannat Educator. If you want, you can connect with me here. Okay, Satyarth. So this Global Financial Stability Report, it is a survey by IMF staff, and this is published twice a year. Okay, in spring and fall. So we have the second wali report in October. This is important from your exam point of view. Okay. Now in this report, if you see the name of the report, Global Financial Stability Report, that means we are going to talk about the financial scenario at the global level. है ना? This draws out the financial ramifications of economic issues highlighted in World Economic Outlook. So World Economic Outlook report, that also we're going to cover probably tomorrow. I will tell you the timings when. So IMF's World Economic Outlook say whatever financial ramifications are there, we are going to discuss about that in today's session. Okay, this report was prepared by IMF staff. It has benefited from common suggestions from executive directors. Okay, and fine. So this is the important report that we are going to discuss today. Okay, so this Global Financial Stability Report, it assesses the key vulnerabilities the global financial system is exposed to. So the global financial system, what kind of vulnerable situations they are facing, or what vulnerabilities they are facing. These discussions are going to take place. In normal times, the report seeks to play a role in preventing crisis. So when there is, this policy report or this financial stability report is very important, because here we have recommendations and all which are going to be provided by IMF, and these recommendations, if applied on the countries, it will help in strengthening the global financial scenario. Okay, fine. So first we have the economic uncertainty and financial volatility related. ठीक है? We have this financial economic uncertainty and financial volatility related chapter. है ना? Let's take up the summary of this. Now markets look calm, but risks are rising. So first is that markets, we are talking about the markets, that they are calm even though the risks are rising. Okay, so despite trade tensions, global uncertainty, we know that trade war like situation is happening nowadays, because of US tariffs and all, right? So because of that, there is some geopolitical uncertainty, there are trade tensions, but still the global financial markets are stable. IMF's growth at risk framework shows risks to global financial stability remain elevated, though the risks are high, but as of now, it is quite stable. Okay, policymakers are advised to stay vigilant and react promptly. Second is risk asset prices are becoming stretched. So second is that risk asset prices, they are becoming stretched. Continued appreciation of risk asset prices despite rising uncertainty. Here we are talking about what? We are talking about the asset prices, the prices of the assets which are increasing. That means we are seeing appreciation in the assets. Despite uncertainty, we are seeing that जो asset prices हैं, they are increasing. Markets seem to ignore potential impact of tariffs. So markets are kind of ignoring the impact of tariffs only on growth and inflation. IMF models show valuations of some assets are stretched even after temporary correction following April 2 US tariff announcement. Even after that, markets are still stable. Okay, they are kind of ignoring this. US dollar has depreciated by 10% so far. Okay, fine. Then debt is shifting towards the government. So more and more governments, they are issuing debt. That means the governments, the global fiscal deficits are when your expenditure exceed your borrowing, or your expenditure, sorry, expenditure is more than your receipts excluding borrowing, excluding borrowing, so debt is shifting towards the government. Global fiscal deficits are rising. Increased sovereign bond issuances. These governments are issuing more and more bonds to raise money. है ना? That means their debt is rising. Advanced economies, bond markets rely more on price sensitive investors pushing up term premiums, long term yields in the advanced economies. Advanced economies means developed economies. Emerging markets are like countries like India, Brazil, and all. है ना? Governments increasingly rely on domestic resident investors. ठीक है, domestic resident investors पे these emerging market economies are relying, reducing forex debt exposure but strengthening bank sovereign nexus. Then we have NBFIs which are expanding. They are growing rapidly, deepening connections with banks, increasing NBFI participation in sovereign bond and corporate debt markets. Retail investors entering private credit also raise systemic risks. ठीक है, then if I talk about the rising vulnerabilities and market fragilities, if I talk about that, then sovereign bond market stress. Although markets stabilized after April to sell off, risks are still there. What are the risks? There is sign of fragility. कि हाँ ठीक है, there are risks. Why? Steeper yield curves, more negative swap spreads, declining convenience yields. ठीक है, forced US Treasury sales could reach nearly $300 billion. So you can see that your vulnerabilities at the global level, they are rising over a period of time. ठीक है, market is becoming fragile over a period of time. Capital ratio, if I talk about banking sector stress, capital ratios have improved but vulnerabilities persist. IMF global stress test finding shows that 18% of global banks would fall below 7% CET1. See what happens is, what is CET1? Common equity tier 1. That means this is the amount of money which is kept on a side in order to absorb the losses. So whenever you have losses, to absorb it, you keep some money aside in the form of common equity tier 1. है ना? So this has to be maintained at 7%. Minimum CET1 should be kept at 7%. है ना? But 18% of global banks would fall below this 7% criteria if there is an adverse situation. है ना? The GSIB is globally systemically important banks buffer. Key buffer has to be kept on the side in case of any kind of financial crisis. And अगर हम NBFCs के शॉक को भी डाल दें, जो NBFIs हैं, NBFIs if they have losses and all, then this risk will rise to 21% from 18%. ठीक है? Emerging markets with strong fundamentals rely more on local currency funding. If I talk about emerging markets, they are focusing on local currency financing. Okay, that means they're becoming they're not becoming very sensitive to global shocks. That means these global shocks will not really impact because they are focusing on local financing only. ठीक है, fine. Then corporate sector risks. Corporate sector is resilient so far but facing risks. So corporate sector is facing risks. Tariffs can squeeze the profit margins. Hurt debt servicing capacity also. है ना? Under a scenario of tariffs, higher refinancing costs, up to 55% of corporate debt could fall into interest coverage ratio of less than 1. That means there is severe stress. Less than 1 means severe stress. And then rapid growth of stable coins ka use is increasing. But there are financial stability concerns related to that because of currency substitution risk in weaker economies. In weaker economies, there might be a problem of currency substitution. Then bond market disruptions. There might be disruptions in the bond market. Investor runs forced reverse asset selling also. Isha, this report comes twice a year. So if you are aiming for 2026, then next year ki report will be more important for you. Fine, Isha? But you can attend today's class in order to understand that what is mentioned in the report and how is the global economy moving forward as of now. How is the global economy? What are the conditions in the global economy? So for general basic knowledge, it is important. Okay? Fine. Then foreign exchange markets are more vulnerable. Despite deep liquidity, foreign exchange markets face heightened risks during uncertainty spikes. Macro financial shocks, which is measured by VIX, MOVE, EPO. What are these? These are basically to measure shocks. These are indicators. These are indicators that measure the shocks and all. Okay? Fine. You don't need to get into the details. Ki how is this calculated and all. So macro financial shocks increase foreign exchange return volatility, bid-ask spreads, risk amplified by dealer concentration, NBFI involvement, large currency mismatches, rising settlement risks, cyber vulnerabilities. In the next few slides, we're going to discuss this in detail also. Then what are the policy recommendations? Firstly, monetary policy. Focus on improving or implementing monetary policy. Countries which are hit by tariffs may need gradual policy rate easing. Where inflation is more than the targeted rate, cautious approach is needed. Central bank operational independence is crucial. If I talk about fiscal policy, urgent need for fiscal consolidation to reduce deficits. So we need to focus on fiscal consolidation. We need to focus on reducing fiscal deficits. Okay. Then emerging market policy. These emerging markets, they should use foreign exchange interventions, macroprudential tools, capital flow management. They should align IMF integrated policy framework. ठीक है. Then banking sector, we need to improve bank capitalization under Basel III norms, simplify regulation without weakening resilience. See, all these points are important for your answer writing. ठीक है. For example, you might get a question related to the global financial scenario, and they might ask you that what are the policy recommendations as per the global financial stability report presented by IMF. ऐसे करके they can ask you to strengthen the global financial sector. So these things are really important. Akshay, you can get the PDF from the Oliveboard app. Just go to the Oliveboard app. There you have to go to the courses section. Courses section where there's going to be a separate YouTube class PDFs folder. You can download the PDF from here. If you don't find it, please let me know. You can connect with me on Telegram if you want. I will share. If you don't get the PDF, then I will let you know on Telegram or share with you on Telegram. ठीक है. Mannat Educator is my Telegram handle. Just type Mannat Educator. You will have access to my Telegram handle. Fine. ठीक है. Chalo. Then fiscal policy, we need to focus on fiscal consolidation, reduce fiscal deficit as much as possible. Okay, there are rising sovereign risks which require more ambitious fiscal measures, improved bond market structure, expanded central clearing for bonds and repo, standing liquidity facilities for backstops. Okay, fine. Acha. अच्छा, we've already done that, है ना? Okay. चलो. Then oversight of NBFIs and digital assets, better cross-border data coordination and analysis, provide liquidity management tools for investment funds, implement FSB recommendations on stable coins. Like we need to focus on strong risk management, anti-money laundering and CFT measures should be taken up. Regulatory powers should be there. We need to bring financial foreign exchange market reforms also. Conduct systematic foreign exchange liquidity stress testing. Close foreign exchange data gaps. Ensure adequate capital and liquidity buffers. Enhance crisis management frameworks. Global financial stability, safety nets, reserve buffers, central bank swap lines. Okay? So this is the global summary, global level summary. Now let's discuss chapter wise. Let's discuss chapter wise the important points. First chapter, we have shifting ground beneath the calm, stability challenges amid changes in financial markets. So how is the global economy stable amid changes in the financial markets, amid challenges that the financial markets are facing? Okay, so this is chapter 1. These are the details which have been mentioned. We are going to discuss these one by one. Okay, so global markets, they show resilience and optimism, just like we discussed before. But this calm hides persistent and emerging risks. So there are emerging risks also. Abhi ke liye it is calm, but there might be risks in future. Why? Because we are going through major transitions. For example, changing inflation dynamics. So inflation dynamics are changing. Tighter financial conditions. So financial conditions are being tightened. Geopolitical tensions, trade disruptions. So we are facing all of the such kind of problems. And these are the risks. Therefore, right? These transitions have created unusual market patterns. The US dollar has depreciated by nearly 10% this year, despite strong US economic performance. Growth at risk metrics reveal that downside risks to global growth remain elevated. If I talk about equity market developments and asset valuation, then equity markets rebounded after global tariff shock in April 25. Gains were heavily concentrated in a few mega cap technology and AI related companies. Valuation models show that several asset classes are priced above fundamentals. Bond yields and term premiums, long-term yields in advanced economies have risen due to increased sovereign bond supply, reduced demand due to quantitative tightening, heightened policy uncertainty. Higher term premiums affect derivative pricing, collateral valuation, and leverage strategies. And investment behavior, households have invested more in equities but remain vulnerable to repricing also. Okay? Then financial conditions ease, but growth at risk remains elevated. Even though financial conditions are on the ease, but growth is still at risk. Recent easing of conditions, financial conditions have eased since April due to calmer geopolitical conditions. ठीक है, geopolitical conditions are a little calm. है ना? Then growth at risk indicators show baseline growth remains stable. Stress amplifiers show that there's rising sovereign debt, stretched equity valuation, sorry, lower liquidity in the market, stronger links between banks and NBFIs. है ना? Then emerging and frontier markets, if I talk about them, then we are seeing divergent market paths. Means major emerging market economies, their is different. Other EMs, their path is different. So major EMs, emerging markets, they have strengthened their local currency bond markets, reducing external vulnerability. Other emerging markets and frontier markets, they rely more on foreign currency debt and have shorter maturities. Then resident versus non-resident investors. A larger share of resident investors improve resilience but also increases sovereign bank nexus. Domestic absorption capacity. Countries with deeper financial systems and higher domestic savings can manage larger shocks. And evaluation risk, emerging market local currency yields have risen, especially in countries with high inflation, weaker institutions, large fiscal deficits. If I talk about sovereign bond markets, so they have these sovereign bond issuances have increased, and market is really fragile. Risk of forced selling. Okay, risk of forced selling under adverse scenarios, the volume of forced sales could exceed dealer capacity, and they can be disorderly market conditions. In emerging market dynamics, many EMs rely on domestic banks to absorb sovereign issuance, which intensifies the sovereign bank linkage. And then liquidity concerns are also there. Bond market liquidity has declined in both advanced economies and EMs despite trading volumes. Now I'm writing this year grade B. I'm looking for important international and national reports. Yes, Akshay, I've taken up so many important YouTube videos, and I've mentioned the list of the important reports. And now Telegram pay only, if you want, I can send the list of the important reports on Telegram. Okay? I'll share you the list of international and important national. I've taken many classes on that. I'll make a list and I will send it to your Telegram. Okay? You can go through them. Then let's talk about financial intermediaries. We have banks. Global banks are stronger today, but a weak tail remains highly vulnerable. So they are strong, but there are some weak points as well. Okay? Like I told you that about 18% of bank system, they should fall below acceptable capital threshold, the 17%, the 7% CET1 that I was talking about. है ना? Then NBFIs, they can also increase the risk to about 21% if they lose out. है ना? Stable coins and digital assets, they have a lot of risks. Currency substitution, weaker economies, reserve asset sell-offs, we've already seen these points. है ना? Corporate credit risk, overall conditions, corporate balance sheets remain broadly resilient. Profit margins are under pressure due to trade disruptions, higher input costs, elevated refinancing costs. These are some problems which these corporates are facing. Which are the sectors at risk? Highly leveraged firms, small firms, firms exposed to global supply chains, they are majorly vulnerable. The private credit risks. Rapid growth of private credit markets raises a lot of concerns. For example, there's lower transparency, potential mispricing of risk, reduced liquidity during downturns. है ना? What are the policy recommendations? Focusing on monetary policy, maintaining central bank independence. Fiscal policy, focus on fiscal consolidation. These policy recommendations are very, very important, which can be written in your answers. Financial regulation is very important. Strengthen both the NBFCs and banks. Okay, then market structure and infrastructure, promote central clearing in bond and repo markets, improve collateral management, enhance cross-border regulatory coordination. Then implement global standards for reserve quality, operational resilience, anti-money laundering compliance. Okay, so this was your chapter 1. Second chapter talks about risk and resilience in the global foreign exchange market. This is specifically for the foreign exchange market. These details we are going to discuss in the next few slides. What is the importance of forex market? First of all, we need to understand that, right? ठीक है? It is the largest and the most liquid market globally. Enables cross-border payments, trade financing. Two-thirds of trading volume comes from cross-border transactions. US dollar dominates foreign exchange trading. ठीक है? More, if we see the market evolution, more and more NBFIs are participating, insurers, hedge funds, and all. They are participating in this foreign exchange market. Okay, there's higher use of derivatives, more algorithmic and electronic trading is there. That means it is becoming very complex foreign exchange market, है ना? But vulnerabilities are also rising. Higher dealer concentration, currency mismatches, settlement risk, and all. Right? Then let's talk about how uncertainty spreads into foreign exchange markets. There are some uncertainty indicators. We have, like I told you, that VIX, MOVE index, economic policy uncertainty. These are indexes, these are indicators which measure the uncertainty at the global level. Okay? Now, what does this chapter say? That if there is higher uncertainty, what do the investors do? They shift to safe assets. That means demand for US dollar rises. Non-US banks and NBFIs, they hedge the exposures, higher foreign exchange swap demand. Dealers expand their balance sheet, dollar funding pressures increase. Foreign exchange market conditions deteriorate through these problems. And so whenever there is any kind of volatility, then there is any kind of trade tension, then the demand for US dollar rises, the demand for safe assets rise, which impact the foreign exchange market. ठीक है? What are the vulnerability amplifiers? Which all factors increase vulnerability? Currency mismatches, high dealer concentration, and high NBFI share in customer flows, and elevated hedging pressure. Then this uncertainty leads to higher demand for US dollars, like we discussed. है ना? Then COVID-19 में they were, for example, let's take up the evidence also. For example, during COVID-19, which was a major uncertain period, strong US dollar inflows we could see. April 2025 US tariff shock, US dollar spot purchases rose only mildly. है ना? Then sector-wise reaction, the NBFIs show the strongest response. Their trading volume rises 40 percentage points after large shocks. Okay, and then it spills over the effect of this foreign exchange. It spills over to sovereign bond markets, equity markets, broader liquidity conditions also tighten. Okay, spillovers are strongest when countries have large currency mismatches. Domestic markets are shallow, fiscal positions are weak. Right? So, what are the policy recommendations? That we need to strengthen the foreign exchange market surveillance. We need to focus on proper stress testing framework, scenario analysis, monitoring vulnerabilities. We need to firstly close foreign exchange data gaps. We need to improve reporting for NBFIs bilateral exposure. So their reporting and transparency should be properly done. Transparency should be there. है ना? Right? Transparency should be there. They ensure adequate liquidity buffers also. Central bank swap lines, reserves, contingency tools, they should be there so that liquidity is enhanced. ठीक है? Strengthen operational resilience, cyber frameworks, coordinated oversight of market infrastructures, reduce settlement risks, expand PVP adoption, develop digital interoperable platforms. Okay, so this was your chapter 2. Chapter 3 discusses the global shocks, local markets, the changing landscape of emerging market sovereign debt. Okay, so emerging market developing economies, they face a very complex environment. What is that complex environment? That there is slower GDP growth, there is slower global growth, interest rates are very high, geopolitical tensions are there, larger fiscal needs are there, right? Fine. So countries with stronger economic fundamentals, credible policy frameworks, deep local market, they have handled the global shocks better. And this is, I think, common sense only. You know, if they have strong economic fundamentals, their credible, their frameworks are, policy frameworks are credible. They have deep local markets. They have handled global shocks much better. Right. Now, what is the framework for assessing the emerging market developing economy, sovereign debt markets? What is the framework that is followed? See, the framework entails 4 pillars. There are how many pillars? 4 pillars. Sometimes directly in MCQ form, such kind of things can be asked. So you have to remember the 4 pillars. So IMF evaluates emerging market developing economies, sovereign debt markets based on 4 pillars. Now, what are those pillars? First is macroeconomic fundamentals pillar. Second is debt structure and sustainability pillar. Third is market structure and investor base pillar. And fourth is absorption capacity of domestic financial system. So first pillar is related to macroeconomic fundamentals, right? So economic growth patterns, external balances, inflation stability, monetary policy credibility, they influence debt pricing and investor confidence. Okay? What do? They influence debt pricing, investor confidence, right? Second pillar is related to debt structure and sustainability. Debt composition like local versus foreign currency, maturity structure, interest cost, rollover needs, they shape the vulnerability. Second is market structure and investor base. A strong domestic institutional investor base supports resilience. If you have a strong domestic institutional investor base, it is your economy is going to be resilient. Right. Then fourth pillar is the absorption capacity of domestic financial system. The ability of domestic banks, funds, and institutional investors to absorb shocks is very important for stability purposes. Okay. Now let's talk about the recent trends in emerging market developing economies, sovereign debt markets. Firstly, rise in public debt. So, emerging market developing economies, public debt continues to rise at a very, very fast pace. Their public debt is very high. Public debt is very high. Aggregate emerging market developing economies debt has reached over $30 trillion. Excluding China, EMDE government debt stands at $12 trillion. So, China you can see is a major debt taker. है ना? Several countries now show debt to GDP ratios above the pre-pandemic levels. Okay, then if we talk about local currency and versus foreign currency debt, then most of these emerging market developing economies they have issued, uh, they have taken up debt in local currency only. So that is why global shocks do not really matter to them much. Okay, then improving market differentiation. Markets increasingly reward stronger fundamentals like low inflation, credible monetary policy, stable external accounts. Countries with weaker fundamentals face higher funding costs, volatile capital flows. Then diverging bond yield trends. Some EMDEs benefit from declining bond yields while others face persistent pressures. We have non-resident investors. Their participation varies significantly. Higher presence increases sensitivity to global shocks. ठीक है? Fine. Then emerging market developing economy bond market sensitivity to global shocks. So how global shocks transmit into EMDE markets? That is something important. How do these global shocks, penetrate into developing countries like India, Brazil, all these countries? How do these global shocks transmit into EMDEs? So EMD sovereign yields rise when US monetary policy tightens. So when there is a change in the, when there is a contraction in monetary policy in US, then it is going to increase the yield. Global risk aversion increases, commodity prices fall, global geopolitical tensions rise. है ना? Then countries with stronger fundamentals fare better. So if there's a country whose macroeconomic fundamentals are strong, they are low, their sensitivity to global shocks is less. ठीक है, if we have weaker fundamentals, then obviously it is going to increase the yields and spreads, then this is going to create a shock in the economy. ठीक है, then role of domestic market depth. Deeper markets reduce volatility and buffer shocks. ठीक है. Then if I talk about vulnerabilities, limited absorption capacity and sovereign bank nexus. So there is low absorption capacity first of all. In the emerging market developing economies, these domestic markets, they lack the depth to absorb. So they do not really absorb. Excuse me. ठीक है. They have increased government borrowing, non-resident outflows, policy shocks. This creates risks of market dysfunction, higher refinancing pressure. ठीक है. Then if I talk about sovereign bank nexus, banks often hold a large share of domestic sovereign bonds. Okay, this can stabilize markets but also create vulnerabilities. Banks may face losses if yields spike, government finances may weaken, and private sector credit may be crowded out. है ना? Then captive investor base risk, if I talk about that, heavy reliance on domestic banks. So mostly these emerging market developing economies, they rely on domestic banks. And during fiscal stress, the bank's balance sheet might, weaken. Fine. Then foreign exchange and duration risks. Countries with high foreign currency debt remain exposed to exchange rate depreciation. Okay, for example, we saw that, because of a lot of debt, there is a problem of depreciation. The value of currency falls. Then deepening local currency bond markets to enhance stability. So what is the benefit of local currency bond markets? They reduce the currency mismatch, they lower rollover risk, they support better monetary policy transmission, they stabilize sovereign funding costs. What are the key pillars for deep market development? Firstly, macroeconomic stability, low inflation, credible monetary policy, stable fiscal frameworks. Okay, institutional quality, rule of law, contract enforcement, governance, deepening local currency bond markets to enhance stability. है ना? Markets infrastructure, sound clearing and settlement system should be there. Investor based diversification, pension funds, insurance firms, mutual funds. We should diversify our investor base. We need to enhance our liquidity. Then there are certain policy recommendations which are mentioned over here. For example, we need to strengthen the macroeconomic fundamentals, especially the emerging market developing economies, so that the risk, global risk, is lowest or it does not impact these economies. Okay, so prudent monetary policy should be there, improve transparency in public debt reporting, fiscal consolidation strategies. We've already seen these recommendations in the previous few slides. You know, improve domestic absorption capacity, develop institutional investor base, strengthen pension and insurance sectors, improve regulations encouraging long-term savings, manage sovereign bank interlinkages, limit excessive sovereign exposure to banks also, deepen the local currency bond markets, improve primary dealer systems, promote electronic trading platforms, strengthen repo markets, enhance market infrastructure and transparency. Right? Then strengthen the debt management and transparency, publish detailed medium term debt strategies, improve risk management practices. All these points are going to really help you in your answer writing. So after getting over with this video, download the PDF and write down these important points which you can utilize in your answers. Okay? So that is all from my side. This is what I wanted to discuss with you. This was an important global financial stability report. This was the October edition. So twice this is presented. And this is released twice, and we've covered the second one, October. Okay? I hope it is clear to all of you. You can connect with me beyond these sessions. Manat Educator is my Telegram handle. Fine. If there's any doubt, you can ask me. Otherwise, we'll end the session over here, right? And we'll meet up in the next class. Tomorrow I'll be taking up most probably the World Economic Outlook report also. So whenever we do it, I'm going to share the link in the Telegram group only. Okay. All right. So uh, that is all from my side. Thank you so much. Have a good evening, all of you, and I'll see you all in my next one. Bye bye.